Traders, hopefully you're doing well. So I thought I would make a big video on how to trade technical analysis as simple as possible, because what I think was the biggest breakthrough in my trading career was not just focusing on the patterns themselves, but trying to identify the current market structure and what the prices are doing. So we're going to use today as an example, and the first thing I like to do when I'm identifying the market structure is I like to locate the most significant key level. And I'm just not going to draw multiple lines on the chart. What I want to do, I want to find the one that is probably the strongest one. And at the very close of the yesterday session, I can see that we have 3 matching lows. So I'm going to plot a horizontal line because we have a matching lows right here. We came and confirmed it right at the start of the day. And from that point on, prices are in a trading range. There is no clear uptrend and no clear downtrend. I came somewhere around here, so this would be what I saw. So since I know I am in a trading range, what I want to do, I want to find the short-term trend lines, because I want to know which trend has ended and which are still in the play, because I want to take the trades on the proper side of the market. We have this uptrend working up higher, we have a break, attempt to make a new high, we have this downtrend working lower, we have a consolidation market, and we have a second leg to a new low. And this is the second leg. This is the first leg, measure it, and this is the second leg. And prices found support at the key level. This is why we are trying to locate this key level. And once again, prices are trending higher. So right now that the prices are trending higher, and this is what I see when I am sitting in front of my chart and I'm trading today, I'm looking at the break of this trend line. So my first instinct is for prices to try to retest this uptrend, because that's the rule of the trend lines. After break of a trend line, there's going to be a retest of a new extreme. But I just don't want to take any setup after break. I want to take 2-legged pullback, because a second entry is a high probability setup. So what I would do is I would draw the short-term trend line, and I would draw it because I want to see if this downtrend, this correction that is right now, is over. Because if I'm not letting this correction play out, I may get trapped. Even though I'm still looking for an uptrend, I still want to respect the current correction. And the correction broke and we had a new low. And here's the thing, we are now located at the EMA. EMA is one of the strong key entry points that prices are reacting to. We have a double top right here. We have a first entry long, pullback, second entry long. So this would be the first trade, the first safe and high probability trade of the day. I'm still looking for prices to make a new high, 2-legged move to the EMA, to the key entry point, and a nice signal bar. Prices made a new high, instantly sold off lower, and made another push higher. So we have a swing right here, and we are continuing to work higher. So there is something a little bit iffy right now, because we keep working higher and higher. So the best thing trying to find the key entry point is to take a look at what is the current trend line most likely going to be. And using the first 2 swings is always the right way to find the trend line. So you just copy it and you put it to the other side. Prices made a new high right here. We have this downtrend working lower. We have a tiny little break and a new low. And notice where the new low found a rejection. Prices rejected right here the sellers of the trend line. So right now this trend line definitely got confirmed, and this is a first entry long, second entry long. This would be a good setup if there was a little bit better signal bar. Unfortunately, the signal bar is horrible looking doji, and we want to see a bullish momentum when we're bouncing off the trend line. So this would be a fairly aggressive trade, but it is a high probability setup because it is a 2-legged pullback, second entry off the key entry point. And prices continue working up higher. So we're thinking that the market structure is bullish right now, and we're looking for reasons to go long. But we're trying to find a support at the EMA. But take a look how prices cannot really go much higher or much lower. In the matter of fact, we are stacking next to each other. This is a huge congestion. Congestion is just small little trading range, small little consolidation of prices. and it usually traps people in because it is tempting to go short and long at the same time. So even though EMA is putting support, you have to respect the resistance and you have to pay attention how many bars are being stacked right here. This is so many, 1 2 3 4 5 6 7 8 9. This is like 14 bars, 15 multiple stims, and the best way to trade congestion is to fade the breakout. Prices broke the congestion, got rejected, sellers once again got rejected off the trend line that was previously confirmed, and a nice bullish reversal pin bar. This is now a good entry because there's a confluence of two key entry points. It was just enough for a scalp, but this is all we care about. The runner is just a gravy and we are mainly scalpers. When the trend line got broken, we are still thinking that the market is going to retest this trend line working up higher and make a new high. So we're not panicking, we are not selling off. The question here now is, can we start selling the market? And only if there is a high probability setup at the key entry point, because the odds are that the bias is still going to go higher and the bulls are still going to look for retest of this new extreme. So this is just a first entry, and this entry right here is far away from EMA, so there is no safe setup for us to take. So we have to let this downtrend play out. I'm going to draw my short-term trend line just to get the feel what the market is doing. And prices started to make a little congestion right here. We have a break and a new low of this downtrend, but there is no setup for smart traders to take because there is no second entry, and we don't want to go long below EMA like this, far away from the key level. If prices touch the key level, we can make a case for going long, but we're not touching the key level, we're below EMA, so longs are out of the question and shorts are out of the question as well. And notice how big bullish momentum right now happened. These are 4 big bullish bars. This is what it's called a spike. Notice how we spiked through the EMA like it's not almost even there, and 4 big bullish bar. This spike right here is a little bit different from this spike because right here we have a bearish bars, and the bullish bars have a lot of stems. This right here are 4 clear bullish bars, and we entered into a spike. And once prices made the top right here, what I did, I was trying to find some sort of potential channel because there is a pattern called spike and a channel, and the bullish and the market structure right now is still bullish. Notice how we rejected the sellers right here, pushed above the EMA, and we are now working to make a new high of this uptrend. This was the first move of the uptrend. Let's say if we measure the move like this is like one piece of lag, or we can measure it somewhere like this. We are now working on our second leg higher. This is the one piece, this is the little bit of a correction, and this is the second piece of a puzzle. And notice how we are above the EMA. Now we have a second entry long right here, bouncing off the trend line and bouncing off the EMA, but I still think this is a little bit riskier trade because you don't want to happen what happened right here. What is better to do is to wait for this breakout pullback pattern. Prices broke higher, they broke the double top resistance, pull back, retested it off. This is a triple touch off the trend line, off the EMA, and this is a very smart entry to take. Taking even the second entry here would be, smart. So I'm going to mark it anyways, because you trading live, you're not really sure. But right here, you got the channel confirmed really nicely. And take a look how this price action is different from this one. Right here, first of all, there are many bars stacked next to each other. And right here, there are multiple gaps in between. So this is not looking that cluttered. But more importantly here, each new low is higher than the previous one, and each new high is higher than the previous one. When you take a look at this, the lows are static, they're not higher, and you can even make a case for the highs being lower and lower. It is almost tempting to look for some trend line, something like this. Whether when you're trying to find a trend line, something like this, each high is higher than the previous one, so it's really not letting you to find the downtrend. In this instance, it is fairly easy to find the downtrend. So this is why this is a congestion, and this is why there's little clues that are helping you that this is not a congestion. This is just a rejection of prices off the key entry point. And prices are right now working up higher. We reach the top of the channel, and this is what I want to talk about, because we have a trend line, we have a break and a new low, we have a second entry long right here, but it triggered above this doji with the bearish body. So this is not what we want to see, and the next bullish bar we didn't trigger above, but the spike and a channel, it's looking something like this. You have to remember that prices will not keep doing this forever. Eventually the channel will get broken. This will happen, and it normally happens when you go long way too late. Smart people, smart traders are trying to find early entry as they can. They want to find the entry right after they found the channel. But people who went long right here, they went long after the entire move happened, because they waited for market to confirm what's going to do, probably because they're relying on common sense. They wait for confirmation. If you wait for confirmation, you know what that means. You're scared to take the trade, and scared traders do not make money in this business. So you have to let this play out, this downtrend. This is starting to get a little bit messy because EMA is in the middle of the prices. You have a congestion right here, and there's a little trick for you guys. If you have a spike and a channel, what you can do a lot of times, you can do, and what you can do is you can measure the one tier and try to find what the second tier is most likely going to be. And in this instance, it worked something like this. And now there is a reason why we can take this trade, because we have a spike and a channel and we have a break. So we are potentially looking for a new high here because the market structure is bullish, but we don't want to go long below EMA. And now we have a bearish trap and a nice bullish bar right here, higher low. And if you are a smart trader and you will measure the move of the tier right here and you copy it and put it lower, you will see that there is a two-tier channel working upwards. So this is a good long to take, and prices are working up higher. This is the new low of the move. You have a first entry short, pullback, second entry short. We're not looking for shorts, even though it's a second entry. The market structure is up, so we are looking only for reasons to go long. Just like here, we were looking for only reasons to go long. When we got the break, we were sitting on our hands because we were waiting for the overall bias. Plus, we could go short, but there were no setups. Right here, we're looking for reasons to go long. Failed second entry short is a trap, but we are far away from both key entry points. So it is better to wait when the prices get to key entry points. You reach the new high, you have this downtrend working lower, you have a tiny little break, move to a new low, and then, doji bar. We are at the key entry point. Prices made a quick, easy scalp. But the thing here is, once again, it is a horrible doji looking bar. It is so tiny that it may be worth taking a chance here because you're risking almost nothing. But, it is fairly aggressive trade here. And I may be looking at the possible setup as I'm doing the video. So let's see if we get filled here, because there's this trend line working up higher. We have this trend line working up higher, somewhere around here. This channel just got broken. This uptrend just got broken, and I'm gonna find my leg. This is the one leg. This is the second leg. I'm going to move my target profit below the signal bar, and you guys can see first leg correction, second leg almost very measured to the T. I'm going to go for 8 ticks because I don't want to get stuck here as I'm making the video. I need to get out of here fairly quickly. And we have a new low right here. We have first entry short, second entry short, but we are below EMA. But we are looking for a new high because the market structure is up. Prices pushed above the EMA. This is good. This is what I want to see. The resumption of an uptrend. And we have a nice bullish bar rejecting prices off the EMA. So hopefully we trapped some shorts who are trying to pick tops way too early while we are inside of this uptrend. This is why identifying market structure is the most important thing. try not to focus on the singular pattern. Just wait for the clear market structure. You have to trust the process. Whoops. And as the trade keeps working up higher, we have a nice bar, and this is not scripted, obviously. I didn't plan to do this, but the trade set up so nicely that I thought I would take this trade. So let's see what's going to happen. But you know, to go once again a little bit over what happened right here, what I think can be tricky for a lot of people who are trying to go long after the move had happened already, and you're going long way too late. You gotta wait for prices to do their thing at the end of the move, because the channel is going to get broken at some point on. You need to try to go long the early as you can. This is why it is hard, because it is scary, and a lot of people want to wait for confirmation. But unfortunately, if it was that easy, I mean, everybody would be doing it. We would all just be waiting for the market to prove us what it's going to do, and we are 2 ticks away from getting. Actually, I'm going to have to merge the contract because I really have to run quick here. I apologize, I'm not going to make the entire chart review, but there's enough. There's plenty of market structure that you should be done fairly early, and we are getting very close to getting filled. It is 17:13, so come on. And it was quick, easy trade. I was looking for prices to make a new high of this big uptrend, just like I was looking here. This downtrend has played out. We had the 2 measured legs lower. This is what I want to see. So downtrend played out. We pushed above the EMA. This was first entry long, but that's not a problem because the EMA is holding prices so nicely. It's a third confirmation of a trend line. And overall day is starting to look like a big uptrend. You can see that every single selling opportunity is quickly rejected, and every single time you get below EMA here and here, you quickly snap back. So I hope you enjoyed the video. If you did, hit the like button, subscribe to the channel if you want to learn about day trading, and I'm going to see you guys next week. And remember guys, just follow the market structure.